Hello and welcome to this video, which will be a part of a 10 series videos that I will explain a very profitable trading strategy that uses areas of interest, reversal signals, and determining profits and targets. So in this video, I will be explaining how to work with Camarilla levels. Now here on the screen, you can see the Camarilla levels that I have altered a little bit to use in this trading strategy. Now, normally the strategy doesn't have the original Camarilla levels don't have the middle line, but I've added it because I found that most of the time this line provides a very good opportunity for trading. Now, the first line, this is the sell line. This is when usually you sell in sideways market, and the first one below is the buy line. So in sideways markets, you will find that the market will bounce between these two lines. So we have the buy line and the sell line. Now, these are used as reversal trading levels. Okay, so when the market goes to the first line from above, you sell. If it goes to the like in this case, and if it goes to the first line below, you look for buy entries. Of course, you don't just jump on the trades, but this gives you like areas of interest where you have to look for buys and sells. Now you can use all the levels for reversal. And you have also the buy and the sell breakout levels. So the Camarilla levels provide you with a opportunity to trade reversals and to trade breakouts. So in the case here, as you can see, all these levels, they can be used for reversals. The middle one usually gives us very good opportunities every day, because when the price is at the middle, it should either go up or down. It can't stay at the middle all day, so it should move. Now, as you can see here, for example, the Euro-US dollar moved from the middle line to the sell breakout, and it failed. Now, a failed breakout level, which are the second on the top and the second on the bottom, away from the middle line. When you have a failed breakout level, you can expect the market to reverse to the opposite breakout level. So a failed breakout, buy breakout, will produce a move to the sell breakout. So it will go in the opposite direction. And now it can happen in the same session or in different sessions. So, for example, as you can see here, we had a failed Euro-US dollar breakout on the sell side. So we can expect it to go in the next session up to the buy breakout. So this is, for example, a failed breakout on the buy level. So in the next session, it moved down to the sell breakout level. Now, sometimes we can have a trade during the same session, okay, that we will be able to get a move between the breakout levels. We will have a failed breakout from the upside, a failed breakout from the downside, and then it will produce a move to the opposite level. Now, for example, this usually happens when the market goes into the European trading session, and it is at one of the breakout levels. So it will be like doing like a test of that breakout level, and it fails, then you will have a very strong move to the opposite breakout level. So this will usually produce very strong moves in the market when they happen. Because you will have a false breakout, and usually a good false breakout is followed by a strong move in the market to the other breakout level. as you can see here. So as we have noted that we have all these levels can be used for reversals. Now, if you want to use the breakout levels for breakout, you need to have confirmations. So it's not like when we see the market going above a breakout level, we just jump to it. No, it's not like that. We have to understand that when we have like a, for example, here on the GBP, JPY, when we have breakouts, we need to have confirmations before we can jump on them, okay? So these confirmations, I will be covering them in later videos when I will be talking about how some divergences and some momentum candles. So you will be able to find how to use these and determine if the market is going to have a valid breakout like in this case or not. Because if it doesn't have a valid breakout, you know that the market will bounce back to the opposite breakout level, okay? So always remember, a failed breakout will cause the market to retest the opposite breakout level, and vice versa, okay? So this is it for this video covering the Camarilla levels, and in the next video I will be talking more about the other levels, other indicators, how you can use them with the strategy to be able to trade these reversal or breakout levels. You can find a link to these Camarilla levels below this video in the description below. If you have any questions, feel free